Good morning, everyone. It's Craig Studnicky from ISG. I'm here this morning on January 29th to present the Q4 Miami report of 2025. Actually, it's more like a year in review of 2025, especially when we compare it to previous years like 2024, 2023, and even years preceding. I think you could probably divide 2025 into two halves. As many of you know, I usually start the Miami report with headlines. And my gosh, in Q1 and Q2, even Q3 of last year, I was trying to defend Miami against some negative headlines from the media, mostly from New York, a little bit even here locally in Miami. But the tide turned in Q4. Yeah, it must be a little bit difficult on the media because even the media finally had to acquiesce to the idea that Miami is the outlier. Miami is South Florida. Miami is Fort Lauderdale. Miami is Palm Beach. We call that South Florida. Take a look at some of these headlines that we've gathered for you. The first is from the South Florida Business Journal. Now, this is a local public business publication here in South Florida that I have a lot of deep respect for. They get it right. And their headline from August was Miami beats New York for the world's top second home destination. Well, that wasn't too surprising given our wonderful weather here in South Florida, but we appreciate the nod. But then came Fox Business, same month. Florida now home to America's most expensive zip codes, leaving California in second place. I suspect that with the proposed wealth tax that will be voted on this coming November in California, that trend will probably only continue. And then Yahoo jumped on it just a couple of weeks ago. Yeah, January 2026. South Florida's real estate posts the second most $10 million sales and up in history. Well, how true is that? Well, we're going to walk you through all of that, but how nice of it is this that I don't always have to defend South Florida against all the negative press. Now, they're finally starting to realize that we are, in fact, the outlier compared to almost any other real estate market in the United States. Let's talk about that headline about real estate transactions over 10 million. Take a look at this slide. We've graphed it since 2020 for you. Look at 2021. There were 415 transactions in South Florida. That's Miami-Dade County, Fort Lauderdale, Broward County, Palm Beach County. In 2021, well, that was the year of the 3% mortgage. Remember, because of everything that happened in 2020 with that dreadful virus, the U.S. Fed lowered interest rates to zero, which affected mortgage rates. Mortgage rates were trading around 3% in 2021. You had 415 trades above 10 million in that year. And then it got a little sober. Dropped a little in 2022, dropped in 2023. 2024 wasn't bad. This past year, 2025, well, more than one a day, 394. We almost beat the record of 2021. When I show you the rest of this data in the Miami report, I know you will agree with me that 2026 will shatter 2021 and will certainly break most records that were created last year. Yeah, last year. In the first half of the year, there was an awful lot of conversation about how slow things were because of high mortgage rates, because of all the wars that were happening around the world. And our newly elected president, Donald Trump, in January, February, March of last year was using the word tariff in almost every sentence. Well, that's kind of calmed down a lot. Maybe he's just using it as a poker chip in a world poker game, because no one is as nervous anymore about that word. And more importantly, we're seeing it in the business activity. And more importantly, we're seeing it in interest rates going this way instead of that way. These were transactions in South Florida above 10 million. Let's take a look at the amount of transactions over 30 million. Yeah, the previous slide measured transactions from 10 to 30. We raised the bar. We raised the bar because the bar got raised by people moving to South Florida, mostly from all over the U.S., but clearly all of Latin America, and now parts of Europe. It's called a wealth migration that has discovered South Florida since 2020. It's in its early momentum. We're going to expand on that a little bit more towards the second half of this presentation. It's not just the amount of people that are moving to South Florida. It's the kind of people, the quality of people, the profile of the people that are now moving here. These are transactions above 30 million. Again, 2021, the year again of the 3% mortgage. Not bad, but we practically doubled that in 2025. 54 transactions. Again, a combination of condos and houses above 30 million here in South Florida, clearly a new record. Want to see above 50 million? We measured that for you too. 2021 was decent, but nothing like last year. 17 transactions above $50 million. Could be a house, could be a condo. More than likely, they're all on the water. But nevertheless, this wealth migration that's descending to South Florida is, in fact, raising the bar. And these are actual results from 2025. These are sales and closings and sales. All we did was summarize the data for you and give you an idea of where South Florida is headed, particularly in this year with rates going down. There was some conversation in the early part of 2025 that maybe prices were going to level off or maybe even drop in South Florida. Well, there are developers rather, that start by buying land that have a completely different point of view. I'll give you a little history of some interesting land acquisitions in the downtown Miami area, which includes Brickell. In 2011, the Gentine Group from Asia purchased the Miami Herald site for $236 million, followed by Ken Griffin around 10 years later at $363 million, a beautiful water site in the Brickell neighborhood. That set a new record for Brickell until December, until last month. Yeah, and last month, Oak Grove Equities, OKO Group, which is owned by Vlad Doronin, paid $520 million or $122 million per acre in Brickell. That's a new record. These developers, whether it's OKO Group, whether it's Ken Griffin, they have a different vision of South Florida than all of those folks that thought that prices might level off or even drop here in South Florida. No, it's quite the opposite. It's going in the other direction. And you see just in land acquisition prices alone. And yeah, I've had people say, well, the piece of land that OKO purchased is really one of a kind. These are all one of a kinds. The fact is, it's not just because it's one of a kind. It's because some of the biggest money and investments in the world are being made now here in South Florida. MLS. For those of you that wonder what last year was like in MLS land, that's multiple listing, that's where we measure all the resale activity of condos and houses. We'll give you those results too, and we're going to compare it to 2023 and 2024. Hopefully this graph kind of speaks for itself. But when you look at single-family homes, together with condos in 2023, there were a total of 63,218 transactions. That's how many of those units actually closed in 2023. Following year, in 2024, a little less, 60,000. But last year, a new record, 66,700 transactions closed last year. Please keep in mind that last January, a 30-year fixed-rate loan averaged around 7.25%. Today, it's much less. We'll show you that in a minute. And why? A little uncertainty in the world. As I said earlier, Donald Trump mentioned the word tariffs, and he sent the financial markets a little crazy, a little frightening. It was a little chaotic. And rates don't like chaos. So when chaos happens, the financial markets respond by usually raising rates. But things have calmed down a lot. They've calmed down a whole lot. And you can see it in this example, just in the number of transactions that took place in 2025. Want to see the dollar volume? Let's go there next. Again, I think this pretty much speaks for itself. In 2023, all condos and houses combined from MLS, $53.6 billion in closings. 2024, 52.6. But look at last year, $62.2 billion, a whole new record for South Florida in terms of the dollar volume. So you had transaction volume record, and you had a dollar volume record. What's also interesting about the $62 billion is that 70% of all of those transactions over $1,000 a foot were cash. Whenever you hear conversations about things like bubbles, that always implies over leverage, no matter what market in the world you're talking about. It's important to distinguish South Florida right now against that kind of a statement because there's more equity in South Florida residential real estate than it has ever experienced in its history. 70% of these transactions over $1,000 a foot were cash. There's many reasons for that. It's not because these American buyers particularly didn't want to pay 6.5% or 7% mortgages. It has more to do with the way the tax structure has been established here in the United States. But regardless, that's an important, very important statistic. Let's go to single-family home inventory. We're going to show you what the difference is between single-family homes and condos. Single-family homes. We're now up to 15,000 at the end of Q4. Single-family homes in MLS active for sale. It's a healthy amount of inventory. I'm happy to see it because there are over 200 companies that are relocating here to South Florida. Centered in West Palm Beach, centered in Brickell Avenue, some in Fort Lauderdale. And a lot of those companies that are moving here, as we've talked about before, the young families that are coming with these companies, $1 million is okay for them. But when you get into the $20, $30, $40 million range, it gets a little bit pricey. You're going to see in this next slide how we broke out that inventory. You've got, of all of that inventory for sale, there's only 159 available for sale in what we call the A group. Let me explain this briefly. An A house is something that's like less than 15 years old. Contemporary in design, usually from an architectural perspective. And they're usually waterfront. We had quite a few of them 2 years ago, 459. A year ago, 381, but now we're down to 159. It's an important fact to note because I'm going to touch again on this wealth migration. There are wealthy people, some following these Fortune 500 companies, some coming here for other reasons, descending on South Florida, and they want waterfront properties. And they don't negotiate very hard. When they find the view they want, the house they want, the condo they want, and it's looking at the water, they'll pay. And look what they've done with houses. The average list price of the remaining 159 is $36 million. The B house. Well, the B house is a lot like the A. It's just not on the water. We have a decent amount of that inventory, but not as much as I'd like to see. 2,300 going into 2026. Now, most of the inventory you see is in the C house. That's pretty much everything else. With an average price of $1 million, there's around 12,000 of those for sale. There you find healthy inventory, at least for now. We're not building a whole lot of houses here in South Florida these days because we simply don't have the land for it. So for the moment, that's a healthy amount of supply for the moment. Now we'll get into the condos. Before I show you what's happened with condo inventory, let me first show you what's happened with rates. I just touched on it a short while ago. A year ago, a 30-year fixed rate loan was 7.2, 7.5%. They've dropped by nearly 100 basis points or 1 full percent lower. Most mortgage bankers, all of them practically, are forecasting that we'll see rates this year, probably in a few months, in the 5s, 5.7, 5.5. No one's really forecasting anything below that. But psychologically, once you dip below 6, tens of thousands of buyers enter the marketplace that want to buy. Forget renting. I'm not building any equity anymore. Now's the time to buy since rates are going down. When all of those people, folks, this is my years of experience selling real estate. I've seen this happen every single time. You have to think of it almost as a seesaw. When rates go down, demand picks up. When rates go up, demand sort of slows down. Well, right now, rates are going down. It's almost as if President Trump is going to have his way one way or another. Short-term rates are going to drop. Long-term rates like mortgages are going to drop. When short-term rates drop, you're going to see a lot more construction happening because a lot of developers are waiting for that event. But in the meantime, take a look at what happened with interest rates. Those numbers that I showed you previously, the amount of sales that over 10 million, 30 million, 50. No, they're not necessarily affected by these interest rates. The amount of transactions are. But when rates drop like this, you're going to start seeing pressure on demand. Clearly, we already have it on the top end. Now you're going to see it on the bottom end. People that are dependent on mortgages are going to start going out and buying houses and condos again because rates are dropping. Amount of transactions, well, the amount of transactions by quarter kind of followed the behavior of mortgage rates. When mortgage rates in Q1 last year were around 7%, we closed 5,900 units. And then you see quarter by quarter how the velocity of sales picked up naturally. Rates went down, the amount of transactions picked up. With rates continuing to drop, I think you can expect more of that. What was 5,900 in Q1 became over 8,000 in Q4. Or as if you needed another example, here's some more data. Total amount of transactions that closed in 2024 was almost 24,000. We closed a little over 27,000 last year. A lot of it picked up in the second half when mortgage rates dropped. Mortgage rates are continuing to drop. This is going to be a different year. 2026 is definitely a different year. Price appreciation. Well, when we look at the average price of closed condos, these aren't listings, these are units that actually closed. They've risen by around 13% over the last 2 years, from 2023 through the end of 2025. Now, these are mostly condos that are less than 30 years old. Yeah, we're still dealing with that issue. When we look at the amount of inventory that's in MLS, I've been here for over 30 years. When inventory hovers between, say, 22 and 23,000 units in MLS, that's kind of considered a healthy balance of inventory. It's not a buyer's market. It's not a seller's market. It's actually a fair contest. We were a little short in 2023. We're a little short in 2024. Looks like when you look at the 23,900 number for 2025, it looks like we've got the perfect amount of inventory. Not really. Because when you age the inventory, when you look at the difference between the inventory that's 30, 40, 50 years old versus everything that's less than 30 years old, it tells a very different story. People are still reticent, nervous about purchasing any condo more than 30 years old because of the threat of special assessments, which is still very real. Listen, that will calm down during this year and certainly next year. Because by the end of this year and next year, most of those special assessments will have been paid. Most of these older buildings will be retrofitted back to, say, current code. But at the moment, not all of these special assessments have resolved themselves, so people are still nervous about going in there. So what you have are slightly less than 7,600 condos for sale that people are interested in buying. That's the number of condos that we have that are less than 30 years old. The number should be 22 to 23,000. We still have an inventory problem. Most of you have said to me that will be handled with the new construction that's being delivered very soon. New construction, some of you call it pre-construction. It's kind of the same stuff, but nevertheless, let me walk you through what that means. I think at the end of Q3 last year, we reported on 142 condominium developments in development in Dade and Broward County. That would be Miami, Miami Beach, Aventura, Hollywood, Fort Lauderdale, Pompano, Hillsborough, that part of the world. Well, 142 has now jumped to 153. These colors that you see, let me explain. The blue color of 15,000 units and 46 buildings, they represent short-term rentals. Sometimes they're called condo hotels. I spend most of my time talking about the traditional condos, which you see in the pink color, the 16,400 units in 107 buildings. I focus on that because when you examine the population gains of South Florida, and you look at the amount of inventory that's in MLS, whether they're condos or whether they're houses, we don't have enough. What we need are more of the traditional condos to accommodate the population gains of South Florida, just the population gains. I'm not talking about second home purchases. I'm not talking about investment purchases. I'm talking about primary homes, primary homes, whether it's a house or a condo that someone can raise their family in. Well, we do find them in the 16,400, the 107 buildings. But we have to look at how many of those are under construction and when will they be delivered. So we did that for you. And I always like to show this particular data point so that you have some reference as to what we've actually done in the last 30 years here in South Florida. In the 2000s, from 2001 to 2010, we built almost 59,000 condos in Miami and Fort Lauderdale, and that was arguably too many, way too many, in fact. They all got sold. Everybody lived happily ever after, but that was way too much supply. In the last cycle, we built 19,900. It is almost the perfect amount of inventory in condos that we have to build every 10 years to accommodate population gains in South Florida. That's the number. Again, not second homes, not investment condos, just primary homes. In this cycle, we've got 16,400 in development. We're running a little bit short of what we'd like, but we'll take it. The issue, though, is that only half of those are under construction. 8,200 units are under construction. The rest of them, folks, they're selling well. This is not a sales issue. It's a production issue. It's a construction issue. Developers are waiting for interest rates, short-term rates to drop a little more before they close on those construction loans. I think this is the year you're going to see a lot of legitimate groundbreakings on the rest of this inventory that's in development. In the meantime, though, there are 8,200 units that are under construction. Now, when will they be delivered? Well, we did that for you. Of the 8,200, the good news is that 60% of those are already sold. 1,300 of them will be delivered this year, followed by 1,200 in 2027. The graph kind of speaks for itself. We're not building, when I moved here 20 years ago, we were building 20, 25, maybe 30-story buildings. We're not building those anymore. We're building 50 stories, 60 stories, 80 stories. The Waldorf Astoria in downtown Miami is 100 stories, the first 100-story building to be built in Miami. They take time. A 20, 25-story building, 2 years, no big deal. But when you get to 50, 60, 70 and beyond, the engineering is different, the time frame is different, they take time. So you see, we have examined the delivery dates given to us by the developers. We need to build more. We need to build a lot more because the population gains are ongoing and the wealth migration also is very much ongoing. Demand. That was supply. That was analysis of supply of houses and condos. Condos that are less than 30 years old, condos that are more than 30 years old, the amount of transactions that we wrote, the dollar volume. It's a very robust market here in South Florida. 2026 is going to be a big year. The interest rates continue to go down and people keep moving here. We got this data point from the U.S. Census Bureau that I thought was of interest for all of you. From west to the southeast, last year, the western part of the U.S. population grew by 687,000 people. Midwest, 434. Northeast, 410,000 people. And the southeast, from Texas to Florida, 1.7 million. That's over half of the entire gain of the population of the United States happened in the southeastern section of the U.S., which is where we are here in Miami. Yeah, the population gain of the United States last year was 3.3 million. Please remember that despite all of these immigration arguments, discussions that are happening lately, we are still the third fastest growing country in the world. Number one is India. Number two is China. And number three is us, is the United States. We happen to be selling real estate, you and me, in that part of the country that is experiencing over half of the population growth. Florida in particular is the second fastest growing state in the country and the third fastest growing country in the world. Another new record. 2025 is the year of lots of new records. I remember sitting here last January and bragging about 1,280 people a day moving to the state of Florida, which shattered all previous records for the state of Florida until 2025. According to the U.S. Census Bureau, we grew by 1,350 people every single day. So we beat the 2024 record. What will 2026 look like? I don't know. I'm guessing it's going to stay at least at 1,350. Wouldn't surprise me if it's a little bit more. The only state that outgrew Florida last year was Texas. They grew by 1,450 people a day. Every single day. Number 3, 4, and 5, honestly, just doesn't matter. It's all about Texas and Florida. C.B. Richard Ellis helped us explain a little bit of the profile of the growth of South Florida. This little chart gives you some names of some notable companies around the world, but particularly here in the U.S., that have relocated operations here to South Florida last year. What does all this mean? Well, when you look at, say, California, all the way on the West Coast, you see that number 34? There were 34 Fortune 400 and Fortune 500 companies just from California that relocated to South Florida. When you look at Illinois, where Chicago is, there were 20 major companies that relocated their operations here to South Florida. When you look at New York, there were 62 notable firms that relocated their operations to South Florida all last year. This data we received from C.B. Richard Ellis. It's another indication of the strength of the profile of the people and the companies that are redefining living in South Florida. So everybody, we just finished talking about demand. You know, I've been writing this Miami report with my co-writer, Athena Rosano, for now 17 years. Yeah, we're in our 17th year of the Miami report. And we always talk about the numbers of people that are moving to Florida. And then we try to determine how much of that is South Florida. By the way, it's about 1/3. So we just talked about last year's record of 1,350 people per day net moving to the state of Florida. And again, about 1/3 of that comes to what we call South Florida, Dade, Broward, and Palm Beach County. So those are the numbers. I have asked my real estate colleague and my friend Ana Bozovic to join me in this particular Miami report, this year in review of 2025. And I'm kind of a research expert now. Athena and I just don't rely on Google and our own sense of research or speaking to the various developers that ISG represents or that I represent over the years. No, we go into every source of data we can find. And I'm going to tell you, I'm not going to name other companies, but there are lots of companies that produce market reports. And the only one that I read thoroughly is yours. You showed up for me and for Athena like a meteor out of the sky, offering a different kind of examination, a different kind of research, a different kind of perspective beyond what we do at the Miami report. And, you know, last year, you and I talked about this. UBS came out with that article sometime in the summer suggesting a pricing bubble was going to hit. I think it was Miami, Tokyo, London, Los Angeles, and Miami was on that list. And both of us, at one of the speaking events that we both shared, looked at each other and said, how is this possible? And how could UBS get this wrong? Folks, Ana, aside from being a real estate broker, she has a company called Ana Analytics, anaanalytics.com.
Analytics.Miami.
Miami, sorry, thank you. I find her to be the gold standard of macro research, and not just pointing out what's happening, but why. Ana, I have, as I said, I've talked about last year's population gain of 1,350 a day. I have made reference in this particular Miami report about this wealth migration that I copied from you. Those are your words.
Thank you.
But I've also, in reading your research, I understand what you mean, but I can't explain it like you can. So if you can, it's not just the numbers of people that are moving here, it's the profile of the people that are moving here.
It's the profile and it's the why.
Yes, exactly, thank you. The profile and the why. So for all of those that are watching this presentation, most of whom are real estate agents, if I may sound like I might sound a little braggadocious, and I don't mean to come off like that, but literally all over the world now, all over, certainly Florida, the U.S., and all throughout Latin America, they watch the Miami report.
Thank you. I'm a fan. I'm a huge fan. It's an honor to be here. Thank you.
Thank you. No, thank you. And I'm always looking to improve it, to make it more valuable for everybody that's watching this presentation. And that's why I'm so grateful that you joined us today on this really year in review of 2025. I need you to give everybody a glimpse into what you see coming in 2026.
A glimpse into the future. Let's go.
So what does this wealth migration mean? And by the way, keep this in the back of your mind. In my mind, this has happened since 2020.
Yes.
What kind of legs does this wealth migration have?
This is still early days. This is a transformational shift in our country away from 20th century realities that we'd all grown accustomed to. A new reality is emerging. It's being defined by increased wealth mobility, both domestic and global. And the patterns are very, very clear. In our country, it's a migration. So we mentioned population movements.
Say clear. Please make it crystal clear.
I'll make it crystal clear.
Thank you.
This is, in our country, this is taxpayers moving away from high tax jurisdictions into low tax jurisdictions. The high tax jurisdictions also tended to be high lockdown jurisdictions. This is all part and parcel. It tends to be with party affiliation.
Lockdown during 2020.
Yes, correct. And so COVID, in many ways, was this cataclysmic event that constrained the movement of people. Thus, it broke habits. People are creatures of habit. If you think about it, the internet came at the very end of the 20th century. It came piecemeal. It wasn't the fast thing we have today right away. It was dial up, and it was incorporated piecemeal into existing habits, existing epicenters, existing office structures, all of that. COVID came, it broke habits long enough to allow for the formation of new ones. That was one of the effects. And then all of a sudden, a certain percentage of people realized they were no longer held captive the same way to their geography.
I say it a little bit more simply. It changed everything.
It changed everything. And it's all, and within this framework, it's important to realize that change is inevitable.
Yes.
I talk about this. Change is the nature of the world, and yet people, there's this kind of thing in the human mind where people think that the present is sacrosanct and it's going to be that way forever. It is not. Think how different the world was 100 years ago. Think how different it was 50 years ago.
Dear Lord,
yeah. Why would the next 50 years of change be any less rapid? If anything, they'll be more rapid due to increases in interconnectivity and technology. So there are periods in history that are defined by rapid change. I look at the most recent example before this one is the aftermath of World War II. That's when our 20th century world was created. That was post-Bretton Woods, pre-internet. That was when New York City emerged as the capital of the 20th century world. And now we're it was not before. London was before.
It was all London.
New York
right.
is not forever.
You're
Nothing is forever.
Yeah,
Silicon Valley is not forever either. It's only existed for a few decades. Nothing is forever. This is all a blink of an eye, and change is inevitable. And so now we have a new reality that's forming, and the mobility of wealth that's being enabled by technology is a huge, huge factor. And what we're seeing clearly in our country, if you analyze census data in conjunction with IRS data, and I did an analysis in 2023, the IRS published interstate migration patterns. I made a whole table showing biggest losers, biggest gainers, all the 50 states, plus District of Columbia, and I made another line there, another column showing top marginal tax rates for the states, political affiliation of sitting governor. And the pattern could not be more clear. The biggest winners, of course, were Florida and Texas. We're neck and neck, but we're 4 times smaller. And the biggest losers were California and New York.
And New York, yeah.
And it's just the pattern could not be more clear.
What was that stat?
Yes, there's a stat that organization did their own sort of compilation of these data points, and they found that the state of Florida gains a taxpayer, I think it was every 2 minutes and 9 seconds, while the state of California loses one every minute 44, and the state of New York loses one every 2 minutes 22, something like that.
Wow.
Yep.
Wow.
So it's not just population, it's what kind of population, it's taxpayers.
There you go.
And the top 1% in high tax jurisdictions like New York City, like the state of California, account for over 40% of revenue. So what ends up happening is that you create momentum cycles. And this is a very important kind of mathematical concept to understand. These things, the things that we're seeing in our market, in the outperformance of our luxury market, of our new and prime product, this didn't happen in a vacuum, it didn't happen out of nowhere. There are forces that are creating this, momentum cycles that are building. And while we're gaining taxpayers, these high tax jurisdictions are losing them.
Which exacerbates their deficit problem.
Yes, we have positive momentum forming. They have negative momentum forming. And these are budgetary death loops, for lack of sound ominous, that are forming there. Because you start losing just 10% of your high value taxpayers, what have you done? And then, of course, the socialist-leaning politicians in power will double down on tax policies and tax whoever is remaining. And this is just inevitable. This script is as old as time. It's been written over and over again. There's no other way it's going to go. And so they're going to keep increasing their hostilities to capital, as we're seeing in California. The recent billionaire tax has been in the news, as we saw with the election of Mamdani in New York City. This is all part of that same pattern. Meanwhile, we're emerging as a path of least resistance for entrepreneurship, wealth, and capital. And that's an important concept, because these forces don't die. They move to where they can flourish.
If I may talk about our former Mayor Francis Suarez. Back in 2020, we went to California, he went to New York, he went to Chicago, and said, he said, we're open for business, and how can I help? It was the opposite of a hostile attitude.
Completely opposite.
Yeah.
That's exactly right. And again, these things build over time. So people will say in the news, you and I have both done a lot to refute negative press that's been biased against us. It was almost like the success of our region and city was contrary to the identity politics of many of these organizations publishing these articles. And also there's a resistance to belief that there's a shift going on. It's human, I don't know, they're kind of resistant to change. But it is what it is, and it's just begun.
So in my point of view, I think I've seen this wealth. I've been here for 32 years. I have never seen the amount of wealthy people, not just buying expensive homes, particularly on the water, but changing, cuisine, changing sports tickets, concert tickets, changing kind of everything here. And as I said to one of the agents that works for me this morning, I said, listen, this is no longer your mom's and dad's Miami.
No, it's not.
This is a completely new Miami. Fasten your seatbelt, because I kind of copied you. I think we're in early momentum.
Absolutely.
Well, because a lot of people want to know, and I know it's a guess, but nobody has the amount of that's put in the kind of time that you have. By the way, this woman has a master's degree from Columbia University in New York City. Her credentials are there. So when I ask her to give us her crystal ball forecast, I think you pretty much rely on it, because God knows I am. How much more time? How many years does Miami have? Miami being Fort Lauderdale, Miami being Palm Beach, call it South Florida.
The same patterns are persisting.
Yeah, to enjoy this wealth migration.
Well, we have to ask ourselves, for the reality that we're seeing, for it to reverse, what would need to happen?
That's a fair way of looking at it.
That's the question, right? We have to identify the forces that are creating what we have. So the forces that we've identified are this tremendous wealth and talent migration domestically and the increasing mobility of global wealth. That's another important factor.
Yes.
Last year had the record amount of high net worth individuals changing their addresses globally. It's a whole thing. This phenomenon is happening internationally, and we're at the receiving end of both domestic and international wealth. So we would have to ask ourselves, what would need to happen for this reality to change? On a simple level, domestically, we would have to have a net migration of high value taxpayers back to the high tax states from which they fled. Do we see this happening?
No,
of course
they
not.
Would have to lose their minds. To
Yes. We had now in the news, it's the opposite. Our positive momentum is building. What is the bank that's opening up their wealth division now in West Palm Beach?
Wells Fargo.
Yes. And that's the first example of a major headquarters of a major bank being opened up rather than just a division. So this is all part of this momentum, and it's just begun. So why would we see reversal? Why would we see all of a sudden interstate migration en masse going back to high tax states? While those high tax states are only increasing their hostilities towards capital. It's basically a zero chance of that happening.
So more than likely, we're going to continue to see.
Absolutely. This is going to build over the next 20 years.
The next 20.
Absolutely.
That's what I wanted to hear from Ana Bozovic.
Absolutely.
Because we have a mutual friend, Jeffrey Ross, who said to me that in a conversation you had with him, he's a developer of a beautiful condominium here on Miami Beach, and he said that Ana said to me that we're in our 5th year of a 20-year wealth migration. And I said, Papa, another bottle of wine. How nice that would be.
100%.
How nice that would be.
And we're seeing that in the data. We had record sales volume past $30 million last year across single family and condos, record transaction volume at very high prices per square foot that didn't exist before. We're transacting regularly past $3,000 a foot. That was basically zero in 2019.
Right.
It's a whole new reality.
And when I think about the chatter in cocktail parties with a lot of real estate agents that were concerned about high mortgage rates, they were concerned about various wars around the world, they were concerned about UBS. When you look at the segment of people that are moving to South Florida, the wealth migration, it made 25 look like it just did not care about the cocktail party gossip. South Florida is moving forward.
Yep, 1,000%.
Listen, I'm going to be asking you to come back here for some more, because let me show you what else is coming. I mean, that's some of the hard information that's affecting not just the people moving here, but you're getting a sense now of the profile of the people that are moving here and why it has legs, meaning longevity, meaning perhaps we really are in year 5 of a 20-year migration pattern, which sets South Florida as truly the outlier in so many ways, not just from a real estate perspective.
In so many ways. And it's like the cat's out of the bag. Word got out.
Yeah.
It's not just even simple economics. There's a high quality of life here, too.
Even the press is having to bow to it a little bit.
I think perhaps they're opening local offices here, and the journalists like living here as well, maybe.
Well,
listen, it's not for nothing. We're experiencing summer while the rest of the country's in a blizzard. This is a small nuance, but it's not like you're moving to some place that's difficult or has harsh conditions to save money. That's not it at all. It's a better quality of life all around.
It bothered me a little bit that I was on the beach this past Sunday in 80-degree weather when my son and daughter, who live in New York, were experiencing 11 inches of snow. It bothered me with just a little bit. And then look at this. We've got the World Cup coming here this year. Every 4 years. Most popular sport in the world celebrates its World Cup once every 4 years. And this year they're coming to Miami. And because of President Trump, at the end of this year, we have the G20 summit.
Yep. How amazing is that? This is just the spotlight continuing to shine as another example.
And in your opinion, more to come?
Absolutely, it's just begun. Truly, momentum is it's a real thing. It's a real force. It continues to build. And most people, one thing I've learned from publishing these reports I've been doing for the last 10 years is that I've really had to learn how to communicate trend lines to people. I've looked at patterns my entire life. So if something looks obvious to me, it isn't necessarily. And I've seen that most people, for whatever reason, they have difficulty extrapolating out the trend. And so the same applies to momentum cycles. There's this resistance to the brain to seeing the new reality emerging until it becomes so obvious that it basically hits you in the face.
That is very true.
And that's what's happening here. So while we're building this positivity, again, our feeder jurisdictions are building negativity. And I grew up in New York City. I have no joy in saying this. I loved New York City at some point in my life. I stayed there for college. I thought I lived there my whole life. I love New York, and it makes me sad. Their current mayor quite literally quotes the Communist Manifesto. Now, what he, literally,
Yes,
I mean, quite literally. So what he can do remains to be seen. He's not a king. He can't just decree. He's just a mayor, right? So he's limited in his powers. But the influence is not good, obviously. It sets a very bad precedent, a bad tone, and he's the mayor of New York quoting the Communist Manifesto. What is this?
It is a new road of more buyers, more people wanting to live their lives in Florida.
Yeah.
California, all over, and all four corners of the United States.
And the world.
Yes.
It's the world
and then,
stage.
And then
Yep.
we've always had Latin America, and now we're experiencing
Yep.
Europe as well.
Correct.
Ana Bozovic, thank you for joining me today.
Thank you so much.
Thank you. This is going to be, I'm going to stick my chin out and say this is one of the more interesting Miami reports that we have ever produced. And so much of it is because you joined me today, filling in a lot of questions that I get asked when I present this report in so many places, particularly in South America. Thank you.
Thank you. It's an honor to be here. I'm a huge fan of your work and what you do.
Well, ditto.
This is such an exciting time in our history, in our country, in our region, and I think that it's such a great thing that we're documenting this. And I think we'll look back at this years from now and say, wow, look at that.
Well,
it was early days.
We were right.
We
pinned the tail on the donkey. Guys, I'll see you in April when we produce our Q1 results. Until then, bye-bye.
Thank you.